Ladies and gentlemen, I would like to welcome you all on behalf of SETA Brussels office. Today we have a very important panel, web panel. As you know, Turkey has announced a huge discovery of gas, natural gas, in the Black Sea region of Turkey 2 months ago. And today we are going to discuss the ramifications of this discovery. There are also some news that there might be other discoveries in the coming weeks or months. So, and of course, this will have some impact on Turkish energy market, but also beyond in the region. Today we have three distinguished speakers, experts on this subject. Today we are going to discuss the ramifications of this gas discovery in the Black Sea. We have today with us Aditya Saraswast. He's a senior analyst on the Rystad Energy Global team. We have Can Ercan with us. He's an energy advisor for the Ministry of Foreign Affairs of the Republic of Turkey. And we have Dr. Levent Yılmaz. He is a political economy and economic security expert working in Turkey and academic. We will discuss this issue from different points, angles. And I would like to start with Mr. Aditya Saraswast. And your company, Rystad Energy, Mr. Saraswast, has published a report on this discovery. It's a technical analysis of the discovery, but we would like to hear more about this and what are your expectations? And I mean, what will the impact of this discovery? And do you think the other discoveries are possible in the region? And what will be the implications for Turkish energy market? And thank you for your participation in this important panel. And the floor is yours.
Yes, I would like to begin with thanking you for inviting us on this panel, and it's my pleasure to attend this, and I'm looking forward to all the quality discussion to follow. Regarding the discovery, I think I agree with you. It's a turnaround moment for Black Sea exploration and developments, but at the same time, it would be as we like to say it, a game changer for Turkish demand moving forward. So I would quickly share my screen with you to have this presentation ready. Yes, please confirm if you can see the screen. Yes, so starting with the presentation, I would like to briefly discuss about the Rystad Energy, our company, and what do our line of business and our presence globally. So we are a global independent energy research and business intelligence company, and we provide data analytics and advisory services to our clients exposed to the energy industry. We channel our content through different channels, if depending on your business model. So if you like data feeds, dashboards, GIS services, or if you would like to have a Q browser to access our data. And at the same time, we also have analytics where we have reports, daily commentaries on evolving topics, but at the same time, we have fact sheets on our assets and recent developments globally. And also we have customized consulting engagements with our clients to solve energy-related issues across the different energy themes. And we have our data channels across different supply segments. So once we have supply chain, we have renewables and powers, oil and gas, commodity markets, and energy transition. So it gives us more exhaustive approach towards tackling this energy business and provide our up-to-date analysis on this on the topics. The agenda of my presentation would be I would like to distribute this into three parts. First would be the first section. I would like to address the trends that we have observed in Turkey investment and production. At the same time, we would look at demand and import in the recent past. And taking the key takeaways from this, from these trends, then we can have a look at how these discoveries would impact the import or gas demand outlook for Turkey. Beginning with the investment and production trends, here in this chart, I have TPO operated Turkey investments from 2010 to 2020. In this chart, you are looking at investments in $1 million, and I have split down the investment levels in exploration capex, development capital expenditures is further split down between oil and gas. In between 2010 to 14, the average investment levels were ranging at just below $500 million US dollars. And following which we have the price crash, which dropped the investment levels to about $150 million US dollars. Following that, we have the recovery, which increased the investments to about $300 million in 2019, and which is below the investments in the first leg of higher oil price cycle from 2010 to 14. And this is the typical trend that we have been observing globally, because now operators are more looking at capital discipline, holding back investments, and now valuing free cash flow more than the previous upcycle. In 2020, we expect the investment levels to drop by 20% to about $270 to $280 million. Over the last decade, the gas developments were holding about 10 to 12% of an average share of total investments. And with this discovery, this large scale of discovery, TPO has to pivot its ways and would have to significantly commit its investment levels to develop the discovery of such large scale. From investment levels, let's have a look at TPO operated oil and gas production levels in Turkey from 2010 to 19. Here in this chart, the stacked columns represent oil and gas production split by different shades of color. In the background, you can see the share of gas production over the last decade. Here we can see the gas production share ranging in between 10 to 14% over the last years, and gas represents a minor share of overall operated oil and gas production. So this discovery in lot of ways would be a game changer for the ways the productions and the investments have been the trends of the last decade. It could very well be pivoting the trends in the next decade. So it would be really interesting to see what TPO has to come up with further appraisal and drilling activities in the block. Now let's have a closer look at Turkish gas demand in the past and the import trends. Here in this chart, we have Turkish natural gas demand from 2010 to 2040, including our outlook as well. So we see that in 2017, the gas demand peaked at about 52 BCM and dropped to about 44 BCM in 2019. The drop was largely driven by the drop in power sector, where the gas has been replaced by renewable sectors, which include solar, wind, and hydropower. We see that moving forward, the demand would recover in 2030 to about 60 BCM and 2040 to about 70 BCM. And the large driver to it would be residential and industrial sector driven by economic growth in the country. So looking at the imports story so far in the country, because the gas production has been so low, has been about 1% of total gas demand. So that requires Turkey to source about 99% of its gas demands through imports. And until 2019, it was heavily dependent on pipeline gas imports through Russia, Iran, and Azerbaijan. In 2019, it sourced about 33 BCM, which is 3/4 of total gas demand in 2019 through pipeline imports. However, in 2020, the growth in LNG markets allowed Turkey to diversify its supply sources, and we see long-term contracts in Algeria, Nigeria, and Qatar taking a share in the energy demands. And at the same time, because there is a glut in supply in the market, so the US spot volumes replaced pipeline imports from Russia and Iran. So taking a cue from these trends that we have observed so far, where we have investments highly pivoted towards oil production so far, and where we have demand and import bills largely coming from because of low gas developments. So let's have a look at how this gas discovery and its potential reported so far can change the outlook for Turkish energy demands moving forward. So briefly about the discovery, it's a Sakarya discovery discovered through Tuna-1 discovery well in the block 3921, which is 100% owned by TPAO. It's a 2200 meter at 2200 meter seawater depth and 150 kilometers north of Turkish coast. The closest to it is in Domino discovery and in Romania, Romanian waters, and so far in the region, in the Turkish side, the story so far, or deep water drilling, hasn't yielded more resources or hasn't been proven discovery. So the first campaign started with Hopa-1 well, where it showed some traces of gas. However, following which three out of 4 wells were dry, and hence it led to relinquishment of the block. And the next campaign was Sile-1 well, where Shell and TPO drilled Sile-1 well to explore more about Miocene and Paleocene reservoirs in this area. However, it was later plugged and abandoned, and the story has been consistent for the rest of the blocks. However, this Tuna-1 well would definitely reiterate the interests of further gas potential in the region, and explorers and developers would be very keen to look at further developments or further resource potential from this discovery. So let's have a look at the impact of it in 2 terms. So first, let's have a look at qualitatively how much would it bring to the Turkish table. So far, as we have discussed earlier, the pipeline imports Turkey was primarily dependent on pipeline imports. So which was in 2020, the average cost of supply would be around $6.5 per MMBTU, and with diversification by importing more LNG, gave it to brought the cost down to about $4.7 per MMBTU through LNG imports. However, further, and on the other hand, if they further develop this discovery and further appraisal and bring this gas to the domestic market, it would further reduce the import bills, as the domestic gas would prove commercial at about $4 per MMBTU. From that, looking at quantitatively, how much of gas imports burden would it shoulder from Turkish demand outlook? There has been a lot of scenarios out there in the market where the Sakarya field would reach its plateau before 2030 and or maybe in the next decade. However, in both cases, we are very optimistic about its impact in Turkish demand or Turkish imports moving forward. So in this chart, we are looking at gas imports from 2017 to 2023, and we estimate about 50 BCM of natural gas imports would be required by Turkish to feed the Turkish domestic gas demand. So extending that to 2030, we see that the gas demand would increase to about 58 BCM, and we estimate the gas discovery to produce at the peak production level of 20 BCM. So that would reduce the import liability to about 38 BCM, which is well below the demand requirements from 2020 to 23. Even taking a bit more pessimistic route to where the Tuna discovery would reach its peak production levels in the next decade. Even then, if we include the 10 BCM growth compared against 2030 demand levels, even then, just by this 20 BCM of peak production levels, still the gas imports would be lower than 2023 outlook. So in total, quantitatively, this discovery would have a great impact on import bills moving forward for the country. So combining both the prices and the imports it would shoulder moving forward. In this chart, we are looking at Turkish natural gas imports and cost savings, all in one chart from 2015 to 2014. On the left-hand side, we are showing the imports in billion cubic meters. On the right-hand axis, we have cost cuts in $1 billion. Since it's very early to predict how would the development life cycle would be, how would the production cycle would be, there are two different scenarios right now. One is to follow the fast-track development as ENI did with Zohr discovery, which would fund the development through the discovery, the production from the initial discovery wells. So that would expedite the development here. And the second part is to tie back these wells in the shallower water facilities, which would take a longer production or longer development life timeline. So in this chart, we have taken the latter part where we see a scenario where the gas would start come online by second half of this decade, and with 20 BCM of its potential, it would very well save import costs of about $1.5 billion per year for the country. So to conclude, there has been, with the discovery of this large scale, further drilling around in the block to check the delineation and deliverability of the reserves. At the same time, having more 3Ds or more seismic coverage of the block would further consolidate the resource estimations, and based on which there would be more revisions on the resource estimates, and there would be better certainty to which the field can be developed and produced in the near future. With that, I would like to conclude my presentations, and I'm looking forward to any follow-up questions you may have.
Thank you very much, Mr. Saraswast, and thank you for this detailed presentation. There are some technical issues that we are not really, have any idea about it. This is a technical issue as well, the gas exploration. However, I think we have a much clearer picture now that what is at stake here. And I would like to now move on to Mr. Caner Can. He is an energy advisor at Turkish Ministry of Foreign Affairs. Mr. Can, we have listened to Mr. Saraswast's presentation. And Turkey has been in the last 3 decades building pipelines and opening its energy market, trying to liberalize its energy market, and building, investing a lot on this field. And there is also this notion or idea of Turkey is becoming an energy hub itself in the region. What do you think will be the impact of this discovery on this issue? Turkey is in the Turkish energy politics and the energy policy of Turkey, and also, what do you think about the potential of new discoveries, especially in the Black Sea region? The floor is yours.
Thank you. Hello, everyone. It's a great presentation, Aditya. I'd like to thank SETA Foundation and SETA Brussels office for this kind invitation and opportunity, and Enes Bayraklı, the SETA Foundation Brussels coordinator. Before I start, if I may, I want to underline that Armenia's irresponsible behavior and heinous attacks on civilians on Azerbaijani soil and critical energy infrastructure in Azerbaijan are a direct threat to peace and to European energy security. Just would like to underline that. And as for panelists, 2 quick remarks, if I may again. I regularly try to read Levent Yılmaz articles on energy and energy security in Yeni Şafak and Yeni Şafak English with admiration. My personal view is that he has a deep understanding on regional and global energy issues. Another appreciation comes for Rystad Energy. Rystad Energy has an office in Istanbul. It is indeed a regional office for covering 13 countries in the region, starting from Qatar, managed by a very dynamic person, Efe Bulduk. We have seen his photo in Aditya's presentation at the last page. For our topic today, I have good news, better news, and the best news for you. I start with the good news. Well, Turkey's natural gas infrastructure is highly advanced. Energy is the engine for economies, and I will start my... Can you see it?
Yes, we can.
Yeah, energy is the engine for economies. We all know that, and Turkey's growing economy needed an increasing energy supply. Natural gas was the answer. Turkish gas market became one of the fastest growing gas markets in the world. Growing power generation sector was the key driver in early gas demand development period in parallel to growing Turkish economy. Until Sakarya discovery, Turkey did not have any significant domestic natural gas reserves. However, Turkish gas infrastructure has rapidly developed over a short period of time. I participated in numerous energy conferences during my previous post in Houston, Texas, and I have witnessed that international experts consider Turkey's rapid gas infrastructure development and also Turkey's role for protection of physical energy security in the region as a success story. I do agree. Turkey's geographical location here's the pipeline starting in as a project in 1984. Turkey's geographical location gave her easy access to very diversified range of gas sources from diversified routes, and gas import contracts were signed with suppliers Russia, Azerbaijan, and Iran. Turkey was also an early mover in recognizing the potential of liquefied natural gas. I will call it liquefied gas from now on because of its pronunciation might be confusing with energy for the audience. Turkey's 2 existing liquefied gas import terminals in the map you can see in Marmara Elisi, and Aliya in Izmir have been operating since 1994 and 2006. To take advantage of the rapidly expanding and globalizing liquefied gas market, Turkey has also invested in floating liquefaction and regasification units. In other words, FSRUs. You can see 2 FSRUs in the picture. Today, Turkey houses 4 LNG terminals, 2 onshore and 2 FSRUs, with a 3rd FSRU on its way. BOTAŞ plans to receive its own FSRU, Ertuğrul Gazi, it's the picture photo on the right, by the end of this year. In other words, Turkey will have its own FSRU. Turkey's investment in these units contributes to the flexibility of supply and provides additional import capacity for the country. In the last decade, LNG became an increasingly important tool for Turkey's diversification of supply to meet increasing Turkish gas demand. Turkey has been able to build an incredible liquefied gas import infrastructure, increasing the nameplate capacity, enabling it to ramp up liquefied gas to technically meet nearly 90% of its current total gas imports. Thanks to her developed liquefied gas imports infrastructure, the share of liquefied gas in Turkey's gas imports rapidly increased in the last 5 years. You can see the yellow bubble in the graphic, the rising share of liquefied natural gas. This was the good news. Now, better news. Natural gas market is currently an oversupplied market and will stay so for a foreseeable future. And more importantly, fundamentals of global gas trading have been changing and becoming much more flexible. Historically, pipeline gas trade and long-term contracts have always been the backbone of natural gas project development. Gas trading was mainly a regional activity and made through pipelines. Trading was rigid that go from point A to point B through pipelines where gas was sold under 20 or 25-year contracts with destination restrictions, take or pay provisions, and the price was based on oil index formula. However, in the last decade, you can see the huge difference. The main trade routes for natural gas trading, the main routes. However, in the last decade, as I said, natural gas trading has turned out to be, I would call, a market activity on which the sun never sets. In other words, highly commoditized and highly globalized. Rigid aspects of long-term contracts have been going through some dramatic changes in the past few years, including the changing share of long-term contracts, weakening oil indexation, and more destination-free contracts. As more liquefied gas projects enter commercial production in the last 5 years, especially in Australia and in the United States, oversupply resulted in a robust spot market and a drop in the share of long-term contracts in overall signed contracts from, very interestingly, from 70% to 30% in just 4 years. Liquefied gas market has also become fully commoditized with extensive spot trading. The linkage between long-term contract price and oil price has been weakening in the last 5 years as more liquefaction capacity, export capacity, in other words, coming online. In addition, the percentage of destination-free liquefied gas contracts signed grew from 25% of total contracts in 2017 to 90% in 2019. 165 million tons of LNG contract expirations through 2030 is expected per annum. This is huge. This is incredible. Mostly long-term supply. This will result in a fundamental reordering of the liquefied gas market. Many contracts will be replaced by more flexible, shorter, and smaller volume deals. Buyers, like Turkey, will be in the market more frequently. Producers will have to be highly competitive to secure commitments. So it's going to be a more buyers market. Another better news, Turkey's long-term contracts will soon start expiring. 2021 will be a crucial point for the Turkish natural gas market, as in this year alone, next year, 16 BCM per annum of long-term contracts with the suppliers will expire. This is almost 1/3 of Turkey's annual consumption today. Old-fashioned long-term contracts concluded in the 1980s and 1990s were based on oil price indexation. Today, 5 years are considered long-term. Then, long-term would mean 30 years back. These contracts also included take-or-pay provisions, of course. And here's the best news. You already know it, Sakarya discovery. At present, Turkey is, as Aditya underlined, 99% reliant on gas imports. After Turkey's Sakarya gas discovery, I have read numerous articles underlining that the domestic gas development in Sakarya field will give Turkey a big leverage in negotiations over new contracts. I would say no, it is just the tip of the iceberg. Right after the announcement of the Sakarya gas discovery by our president, Recep Tayyip Erdogan, on September 4th, Russian newspaper Kommersant said, exactly, I'm quoting, Turkey received a trump card in the negotiations, referring to the Turkey's largest gas discovery. Turkey has made its first giant gas discovery in a dramatically changing global gas order. This is very important. And the timing of the discovery could not be better. Therefore, it is clear, even before potential production in the field, Sakarya gas discovery resets Turkey's negotiating power with its gas suppliers. I would like to underline again, more than 40 BCM per year of long-term gas contracts of Turkey are up for renewal in the 2020s, including with Azerbaijan. I believe we have just seen the tip of the iceberg in terms of Sakarya discovery. Turkey is the 5th natural gas importer of the world, biggest gas market in the region. Sakarya gas discovery will help Turkey start balancing its own import dependency. This is not only important for Turkey's natural gas bill, as Aditya underlined, but also for creating additional competition in the Turkish gas market. Turkish gas will have a direct competition with the Russian, Iranian, and Azerbaijani gas in Turkish market and in the region. And it will bring further competition to the Turkish gas market in a period where competition will be the key concept in the world. Another important milestone is September 1st, 2018. This date marks an incredibly important day in Turkish energy sector. For me personally, if you ask me, it is, I believe, more important than our recent gas discovery, because Turkey started trading natural gas in Istanbul Energy Stock Market. It is operated by EPH, based in Istanbul as well, and equivalent of NYMEX for our American friends watching us. At the end of this year, hopefully, Istanbul Energy Exchange will start future price indexation for gas. I'm so excited and I look forward to seeing it. It's going to be another milestone for Turkish energy sector. With EPH, Turkey aims at creating a natural gas trading hub in the region where gas is heavily sold with oil indexation. The development of hubs is sometimes coded as a prerequisite for the development of competition. As for competition, as I underlined, I can give this example. Turkey imported natural gas from only a couple of countries in 2000, but last year, Turkey imported natural gas from 13 different countries. Bringing in new sources of natural gas from various countries not only reduces Turkey's dependence on any one supplier, but also brings competition for the broader region. Turkey is not simply seeking to diversify supply. We know that the capacity of the country's infrastructure, Turkish infrastructure, gas infrastructure, is higher than Turkey's current and projected demand. Turkey aims to become a natural gas trading hub for the region. The International Energy Agency defines energy security as the uninterrupted availability of energy sources at an affordable price. We all know this explanation. And Turkey has been a key contributor to the regional and European energy security in terms of uninterrupted availability of energy sources. Thanks to Turkey, people in Greece have been heating their homes in harsh winter conditions and using electricity without any disruption since 2007. Now, with the Energy Exchange Istanbul, Turkey will enhance its role in European energy security, this time with ensuring affordability of energy sources. Energy Exchange Istanbul and Istanbul benchmark price for natural gas will play a critical role for energy price security in the region, particularly for the Eastern and Southeastern Europe, which is less connected to European gas trading hubs. In short, for decades, Turkey has been the backbone of the regional and global energy supply security. Thanks to Energy Exchange Istanbul operated by EPH and our new recent gas discovery, Turkey will be a key contributor for energy price security for the broader region. Turkey is becoming a natural gas trading hub in the region, and establishing Istanbul benchmark price will also bring more liquidity and competition for liquefied natural gas, LNG. This will serve win-win trading options for US liquefied gas as well. That's all. Thank you.
Thank you very much, Mr. Can. Thank you for this wonderful presentation. Now I would like to move to Levent Yılmaz. Yes, you are with us. We heard these two presentations yeah, in the very detailed analysis of the impact of this discovery, but also Turkey's energy policy. But there is also a broader issue here. As the other previous speaker has mentioned, Turkey needs energy for its economy. It's a growing economy. It's has a young population. It is a very fast developing country. And it's been trying to diversify its energy resources in the last 2 decades, as far as I know. And in the last 3 years also has declared a national energy and mining policy. So can you tell us about more? What is Turkey, doing in terms of its energy investments in different fields like solar, renewables, wind? There is also nuclear power plant being constructed in the south of Turkey. So can you give us a much bigger the picture? Of this discovery.
Thank you very much, Professor Bayraklı. It's very hard to speak after two distinguished speakers because they told every good point of this discovery. And as you say, I'm going to make a very short presentation about Turkey's mining and energy policy, because national mining and energy policy, because Turkey needs to diversify its energy sources, because we need energy. So I don't know what can I say after Mr. Can and Aditya, because they are very reliable energy experts. So I'm going to make a short presentation. If it's ready, I'm going to share my screen.
Doesn't work?
It is working, I think.
Okay. Are you with us, Levent? Mr. Yılmaz, are you with us? I think we have a problem.
I'm back.
Yes, he's joining us
I'm back. Sorry for technical issues.
No
I'm
problem.
sharing my screen again. Sorry. Is it okay?
Yes, I think we can see it. Right. Yeah.
Okay. Sorry for the technical issues again. I'm going to show my screen. Actually, the gas discovery at Sakarya zone is not a single discovery for Turkey. First of all, Turkey succeeded by herself. This is a very important point, I think. Second, it's the largest discovery in the Black Sea, as Mr. Can told. And it's the second biggest discovery in 2020. And third, it's a giant reserve. As you see, let me show you here. As you see the numbers, it's a giant reserve. So this is very important for Turkey's energy strategy, Turkey's national energy policy. It's very important. It's a giant reserve. Let me say, according to government sources, in a couple of weeks, I think the Turkish Petroleum is going to revise the reserve amount upwards. And Fatih drill ship is still on the zone and continues to drill. So in a couple of weeks, I think we will hear it upwards. So lastly, I have to say it, the worst comment about this discovery is dividing 320 to 48, because the total amount of Turkey gas import, because the discovered amount is equals to 7 years gas consumption of Turkey. It's not true. This is more than a discovery. I repeat it. And also my second slide, you can see Turkish Petroleum is also drilling in the Eastern Mediterranean. Oruç Reis seismic research ship and Yavuz drill ship is in the field. And also we are waiting good news soon from that zones. This is total installed capacity, as Mr. Caner also showed this graph in his presentation. This is very important because Turkey managed to increase her installed power capacity 3 times in 18 years, from 31 gigawatts to 93 gigawatts. It's a huge amount, I think. And then these are the sources of electricity generation by years. As you see in this graph, renewable energy sources are developing year by year. This is very important also for Turkish energy policy. As you see, renewable energy is going more important in Turkish energy electricity generation because Turkey's energy vision is not just about natural gas. This is the national energy and mining policies. One of the outsources of the national energy and mining policy. Renewable energy is very important in the natural energy and mining policy of Turkey, as you see. Turkey achieved approximately 1 gigawatts installed power generation capacity growth in first half of 2020. Much of this power generation growth came from renewables, as you see in this slide. Let me check it. 652 megawatts hydro, 286 megawatts wind, 28 megawatts biomass, and 10 megawatts solar. This is very important because that makes Turkey sixth among 38 European countries for additional installed wind capacity, both in 28 and 29. In the first half of 2020, 66% of total power generation is generated from domestic and renewable energy sources. 13% of total electricity generation is solar and wind. This is very important. As you see in this slide, that makes Turkey fourth after Germany, UK, and Australia. In the last 5 years only, Turkey renewable investment was $16.5 billion. This is very important. I will repeat it again. In the last 5 years only, Turkey's renewable investment was $16.5 billion US dollars. Let's look at this map. This is the gas transmission infrastructure of Turkey built by BOTAŞ. As Mr. Can told, it is a really success story. But there is a question we are all asking, we are all hearing: is Turkey a bridge or an hub? I think from now on, please never say it again, because Turkey is already an energy trading hub nowadays and getting stronger year by year. When you look at this map, you can easily say that Turkey is an energy bridge between East and West. Yes, we know it, but this is not enough for Turkey's energy market. This is not enough for Turkey. So from now on, please don't say Turkey is an energy bridge. Turkey is a hub, is a trading hub, thanks to EPH, thanks to Exist, Energy Exchange of Istanbul. In this slide, you see FET's 29 gas hub benchmarking study. Let me show you Turkey's position. you see, you see Turkey here, and Turkey is doing very, very well in recent years to be a great trading hub. And we have a to-do list. This is our to-do list. As you see here, if you do everything very, very well, this is the highest score to be a trading hub, to be an energy hub, according to FED. And Turkey is doing its homework. So I think next month they will announce the new benchmark list. So I think Turkey will be in a better position. So we are doing our homework very, very well. And but we have some opportunities and challenges. Yes, we have Botaş. They did a great infrastructure for gas transmission, but I think I am the bad cop of this meeting. So we have to fix something about Botaş, because they both do transmission and trade. That makes that's not a good position for Turkey's energy market, honestly. So yes, we have Exist, Energy Exchange Istanbul, thanks to EPH. Exist is a key actor in Turkey's trading hub vision. But as I told you before, we have to fix some issues about Botaş. What are they? Up to me, high import dependency and heavy dominance of a single import company, Botaş, created a monopoly in Turkey. Turkish national gas market is dominated by Botaş. Market dominance still continues to be a major issue for Turkey. In 2019, Botaş supplied 95% of the total gas supplies to end users. It's a huge amount. And the remaining just 5% supplied by private gas importers. So Botaş sale price and tariffs strategy is the key pricing components for the Turkish gas market still. But we need to liberalize the energy market. So Turkey's liberalization that initiated by the establishment of the regulator, I mean EMRA, in 2001, showed significant process in the electricity market. However, the liberalization in the natural gas market left far behind the power market. So we need to fix something about Botaş. Botaş treats natural gas as a strategic commodity and limits the allowance of the private companies to increase their market shares in the gas imports, exports, and trade. As a part of this strategy, natural gas prices are still set by Botaş, and they are determined by taking both political and commercial concerns into account. Pricing remains a difficult issue, as import contracts are expensive and retail gas tariffs are not reflective of these prices. Mr. Can told take-or-pay contracts and showed the take-or-pay contracts amounts. On the other hand, we have some opportunities. Energy Exchange, I mean Exist, show a successful performance in developing new trading tools, both for electricity and natural gas markets. EMRA's, I mean the energy market regulator of Turkey. EMRA's current regulations allow spot pipe gas imports and also companies that obtained gas import and export licenses from the authority. Shortly, Turkey needs to divide Botaş to two parts, transmission and trade, but the amount of Botaş trade must be 20% of total gas trade, as written in the natural gas trade law. I think that's all for this session. for me. If any questions, I can try to answer honestly, but I'm sure Mr. Can is and Aditya is ready to answer all of the questions, because as I told you before my presentation, they are very good experts. They are very distinguished experts about energy. Thank you very much, Professor Bayraklı. If any questions, I would like to answer.
Yes, thank you very much, Mr. Yılmaz. Let me check if we have any questions from our audience. As far as I see, there are no questions.
So everything is clear.
I think you have explained it very well. The issue here, I think it's clarified very well for our audience. But I would like to ask one question also to Mr. Saraswast. There was this news I read in a newspaper, in an English newspaper, that there might be, I mean, this reserve might be, there might be new discoveries in the Black Sea region. There is a talk of 800 billion cubic meters of gas, so 3 times more than what is announced. If this is true, I mean, that will have a much bigger impact, I assume. And what do you think about this? And secondly, there was also much discussion in Turkey about the discovery. I mean, some criticize that it is not really very sound, let's say, discovery. One needs to drill more than one well to, you know, assess the reserve. And I mean, of course, I'm not an expert on this issue, and I mean, I think it's nice to hear your expert opinion on these 2 issues.
Definitely, I think that's a very good question, and something that we have been hearing a lot as well in different media reports. So to answer your first question, I think the pessimistic view for the resource estimates have been because of there have been more misses than hits in the Black Sea. But on the brighter side, we have Domino discovery already in Romanian waters, and then we have now Sakarya field, which gives a good outlook towards how much of gas potential the Black Sea has. So the yet to find potential is very well there, because we have seen a large scale proven gas reserves through these 2 discoveries. So with that, if all of that resource have been realized in Turkish waters, it could further shoulder a lot of weight from Turkish import bills to feed the domestic demand. So with Sakarya alone, we see about 25 to 30% of reduction, and further yet to find, or realizing the yet to find resources would further reduce the dependency on imports. And at the same time, which would not only reduce the import bills, and as my fellow dignitary panelist pointed out, it would very well give Turkey some sort of leverage and some sort of negotiation power moving further in time to source their import bills. For your second question, I think the kind of pessimism is there because the information is very limited regarding the discovery. Definitely, there would have generally a discovery has to go through different drilling and appraisal program to check how long and what's the delineation of the reserves, and with the flow rates and discovery flow rate tests and DSTs and everything we have, it gives us much better approximation or estimation of the kind of scale of the discovery, both in resources and the extent of it. So that is actually driving this sort of narratives out there in the media reports. And I believe that with one well drilled and further GNG studies and appraisal built onto the learnings from this well, would further consolidate or revise upwards the the resource estimates from this giant gas discovery.
Just I can't. Yeah. Okay. I have a difficulty to see. All right. Now. Yes. We have three questions. One question is directed to Mr. Can. I mean, one of our we were asking, what does it mean that Turkey? This bridge or hub question. What is the difference actually? The second one is how feasible do you think the infrastructure will be built given 3-year deadline, and if the investment will be eligible in the global markets? That's another question. And the third question is Turkey willing to work with majors to develop its resources? If yes, which one? I think this here I think it is meant the companies, big companies, I think. And the last question is about again the question of Turkey being a hub. Could you elaborate the latest attacks against BTC and the pipeline to Turkey and Europe and its impact on the energy security? This question is to Mr. Yılmaz. I think we can start with Saraswast and then continue. You can pick the question if you want to answer all of them, or if you think one of them is more in your field, please feel free.
Yes, so I would like to give our feedback on this infrastructure query, and I'm sure my fellow panelists can better address the following questions. Regarding the infrastructure development, I think we have seen there's a case example of Zohr where if expedited further wells in the block, and if it's proven discoveries, then it can very well be tied back to the subsea or to the shore. So that allows not only operator to expedite the development and better plan the ramp up to its peak production capacity, but also it gives a flexibility for operators to, as with the gas already coming online, it eases off the financial burden of the development of discovery of this large scale. So definitely, depending on the further well schedule TPO opts for, if they go on for an extensive drilling and appraisal campaign based on this one well and plans to tie it back, then there would be you can see the gas starts to flow with the announced timeline of about 2023. So that would, again, as I mentioned in my presentation as well, it's very crucial on how TPO carry this discovery forward in terms of drilling and appraisal activity, and following the fast track expedited development route with Zohr's example, you can see the gas starting to flow at about 2023 timeline.
Thank you very much. And let's continue with Mr. Can. The floor is yours.
Thank you. Well, as for the bridge or trading hub question, until last year, Russia has been sending its natural gas exports to Europe, Ukraine, and Ukraine was the biggest transit country in the world. So we always hear the strategic importance of a transit country, but if a country becomes very important an energy center, then Ukraine would be the energy center of the world, because almost 80% of the natural gas flowing to Europe was transiting via Ukraine. But we didn't see any, impact on Ukraine. So Turkey's expectations, Turkey's huge infrastructure that I try to underline, especially in terms of gas imports and also transmission capacity, serves this big strategic aim to become a natural gas trading hub. When we look at our region, you think about the broader region: Black Sea, Mediterranean, Middle East, Eastern Mediterranean, even Caucasian, Central Asia. Natural gas is sold oil index formulas, with oil index formulas around 70-75%. So this is not sustainable. In Western Europe, we have TTF in Dutch example, and the national balance point in UK. So there is this competition, and natural gas prices are established in accordance with the direct competition with each other. So the final end user enjoy this cost reflected prices. As for the other question, the impact of Armenians' attacks on the Azerbaijani energy infrastructure. Indeed, today, Rystad Energy, or a couple of days ago, yesterday, they released a report on this issue, and I have the report here with me. It is the fragile oil and gas interests at stake for Azerbaijan, Russia, and Turkey in Nagorno-Karabakh. So the strategic infrastructure, energy infrastructure, BTC pipeline, Azerbaijan exports 75% of its oil exports through the BTC pipeline. It is incredible. And also we have the Baku TBTC Erzurum pipeline, which starts with South Caucasian pipeline. And through that pipeline, Greece meets, as tried to underline in my presentation, 1/3 of its annual gas consumption. So indeed, as underlined, as mentioned recently by our president, Recep Tayyip Erdogan, this direct attacks on Azerbaijani critical energy infrastructure is actually a threat to European energy security, direct threat to European energy security and Turkey's energy security. And also Georgia supplies 95% of its natural gas from Azerbaijan. So can you think about any disruption in natural gas flows in harsh winter conditions? Georgia will be without gas for a couple of days. So this is not sustainable. So Armenia should stop its heinous attacks on Azerbaijani soil, I believe. That's I can say.
Thank you very much. Thank you, Mr. Can. And Mr. Yılmaz, your response, please.
Thank you very much for the question. Mr. Can answered my questions, detailed points, but I can add some points for that question. As you know, energy security is very important for all over the world, and especially for Europe, because they need energy more than lots of zone in the world. I can add something for Mr. Can's comments, especially Greece. When you look at Greece energy market, when you look at Greece energy supply, they import 1/3 of their natural gas from the pipeline that comes from Azerbaijan. So Armenia is attacking through EU's energy security, Greece energy security. But what will we discuss about this situation in the near future? I'm not sure, because EU is with Armenia, I think, in this conflict. So if Armenia bumps the pipelines, they have to be ready for natural gas cuts, energy cuts. They have to be ready for that, because Armenia is bombing the Ganges Sea of Azerbaijan. And as we all know, the pipelines started from the Ganges Sea to European energy security.
Thank you. I think we have answered. You have answered all the questions, and that was a really fruitful discussion. I have learned a lot, and I would like to thank all of you for your participation. Thank you very much, Mr. Saraswast. Thank you very much, Mr. Levent Yılmaz and Caner Can, for your participation and contribution. I would like to thank also to our audience for their attendance, and I hope to see you in our future events. Thank you.